In this video, we're going to show you the #1 trading strategy that combines moving averages with price action. This will be the most important video about moving averages you will ever watch online. You can apply this incredibly simple and powerful strategy to crypto, Forex, options and stocks trading. Moreover, we will take a look at the breakdown of the recent Bitcoin short trade we took, using this exact strategy. During this video, we also will show you how you can get access to our top-notch private indicator, known as quantAlgo. This algo tells you when to buy and when to sell, giving you an insane advantage over other traders. Before we continue, make sure to hit the subscribe button and hit the notifications bell, so that you can keep up to date with new content releases. So, what is the moving average? A moving average is a widely used technical indicator that smooths out price trends by filtering out the noise from random short-term price fluctuations. The average is taken over a specific period of time, like 10 days, 20 minutes, 30 weeks, or any time period the trader chooses. Moving averages is one of the most popular trading indicators among traders. However, it is often used wrongfully. For instance, some traders use the moving averages crossover to open long or short trades, which may be okay when the market is trending, but will lead to huge losses when we have a ranging market. Other traders use only a single time frame approach, not combining the moving average with price action, which is also wrong. Finally, some traders tend to close the trade when the moving average shows a reverse crossover, which is not good since it gives too late an exit point. So, the video will be structured as follows. We initially discuss the trigger event, which enables us to determine the direction of the trade we're waiting for based on the crossover of the slow and fast moving averages. Next, we will use a multi-time frame approach coupled with price action confirmation to verify the initial crossover and enter the trade with the tightest possible stop loss, leading to a perfect risk to reward profile. Finally, we will add one overlooked indicator that will allow us to extra confirm our previous step and also serve us as an exit event. At this point, let's discuss all steps required for this strategy. Here's Bitcoin 1 hour time frame. Firstly, you should add the two exponential moving averages to your chart. Go to the Indicators tab, type EMA, and choose the following indicator twice. At this point, we should change the length of the slow EMA to 60 and the length of the fast EMA to 20. Let's also adjust the style and make our 60-period EMA white while 20-period EMA blue. So, we need to wait for the EMA crossover on the higher time frame to obtain an early bias. With that, a 20 EMA break above the 60 EMA will signal us an early bullish bias, while a 20 EMA drop below the 60 EMA will mean an early bearish bias. In this video, we will utilize 1 hour and 30-minute time frames as a higher time frame component. You can also try to use different combinations with higher or lower time frames. However, keep in mind that the lower the time frame is, the more market noise is present. Consequently, a more frequent signal nature can decrease the effectiveness of this strategy by reducing the win rate. So, if you are enjoying the video, leave a like on it. Also, let us know your questions and thoughts below or topics you want us to cover, as we always take your comments into consideration and love hearing from you all. Now, let's discuss the most important component of the strategy. After receiving an initial EMA crossover on the higher time frame, we should go to the lower time frame. In this case, we use the 15-minute time frame and wait for the pullback to the 60 EMA. And here's a very key point. The pullback should consist of at least 2 clear rejections of the 60 EMA, so that we will be able to draw a trend line by connecting the respective swings along the bottom. Also, the EMA crossover conditions on the 15-minute time frame should correspond to the EMA crossover on the higher time frame. Let's go back to Bitcoin and do the same step by step. So, here is the 1 hour time frame chart, and here's the 15-minute time frame chart. As you can see, we receive a bearish bias on the higher time frame as the 20 EMA drops below the 60 EMA. Here's the 1 hour crossover event on the 15-minute time frame. We can also see that, on both charts, we have a crossover confluence because in both cases, the 20 EMA is below the 60 EMA. And more importantly, we have a clear pullback on the 15-minute time frame, as can be evidenced by these two obvious rejections of the 60 EMA. Next, we can connect the swings along the bottom through the trend line, and wait for a breakout of it, to enter the trade short. At this point, let's move to the next step and add another indicator to extra confirm our pullback conditions. So, go to the Indicators tab, type Trend Ribbon, and choose this indicator. For now, let's adjust settings and change the channel period to 50. So, after we caught a trend line breakout in the previous step, we need to confirm it through this indicator. With that, we need to see a red bar along the bottom in a bearish case, and a green bar along the bottom in a bullish case. Also, the trend ribbon color change will act as an exit event for us. Let's consider it as an example. So here's Bitcoin 15-minute time frame chart and here's the trend line breakout candle. As you can see, at this point, the trend ribbon shows us a red bar along the bottom, allowing us to enter the trade short. Finally, the trend ribbon color change will indicate a possible fresh trend change, thus creating an exit event. As you can see here, we get a green bar along the bottom, meaning that we should close our short trade, and the price then stacks in the consolidation range. For now, let's move to the next part of the video and look at more market examples. During this part, we will also go deeper into suggested risk management rules for this strategy. Before we move on, we want to share with you our top private indicator, QuantAlgo, which can be used in combination with previously discussed concepts or on its own. This high-quality algorithm, which combines complex trading processes to tell you when to buy and when to sell, was developed to enhance your trading experience. You can use it on any time frame for different asset classes. So, if you want to access QuantAlgo to get results fast, all links will be in the description and the comments section below. Without this algo will put you at a disadvantage. Here's $1 1 hour time frame. We can see that the blue line drops below the white line, giving us an early trigger for the trade short. Now, let's go down to the lower time frame and wait for the pullback. So, here's the 15-minute time frame, and in this area, we got a 1 hour crossover. It is also important to note that the blue line is well below the white line on the given time frame. Now, we need to wait for the pullback to the 60 EMA, and here it is. We have two great swings, which satisfy our entry rules. However, if we draw a trend line this way, we can see a choppy breakout candle right here. Moreover, the trend ribbon invalidates this entry because we have a green bar along the bottom. For this reason, we need to ignore this move and extend the trend line, taking into account the third swing. And as you can see, then we get a clear momentum breakout below the trend line. And more importantly, the trend ribbon indicator shows us a red bar along the bottom, confirming our entry conditions. When it comes to risk management, we recommend you place the stop loss above the previous swing high and hold the trade until the trend ribbon color change. Or you can use a static take profit and, for example, target 2 for 1 risk to reward or apply a trailing stop loss technique. In this video, we use the first options and hold the trade until the trend ribbon color change. With that, the trend ribbon bar turns to green right here, meaning that we should close our position. And as you can see, we get a perfect 3-to-1 risk to reward trade. For now, let's consider the long example as well. Here's Microsoft stock 1 hour time frame. As you can see, the blue line breaks above the white line, giving us an early trigger for the trade long. Now, let's move to the 15-minute time frame, aiming to catch a pullback. So, here's the 15-minute time frame, and in this area, we received a 1 hour crossover. Now, we need to wait for the pullback to the 60 EMA, and here it is. We initially got a rejection of the white line area, with another deep rejection right here, forming two perfect swings along the top. So, let's connect those swings by a trend line and wait for a breakout of it. And here it is. We can see a clear momentum-backed breakout and the trend ribbon also shows us a green bar along the bottom. So that all our entry criteria are met, and we can enter the trade long. We place the stop loss below the recent swing low and wait for the trend ribbon color change to close the trade. So, here's the trend ribbon turns to red, causing us to close the trade. And as a result, we got a great 2.5-to-1 risk to reward trade. So, if you are enjoying the video, leave a like on it, and subscribe to our channel, as it always motivates us to release new content more often. Thanks for your time, and I'll see you in the next video.